So, Sarah, how alarming are these warnings from chip makers in your view?
I mean, the only chips right now anyone wants are potato, right? Like, this is not good for chip makers. There's twin pressures here, right? Certainly the weakened consumer demand for things like PCs, but also, the increasing restrictions around selling to China mean that a massive market is largely off limits. And so that's also going to cause problems for the hardware companies because, they're the ones who aren't buying the chips. So they're not selling hardware. And I think Apple's, lowered forecast for some of the models of its new iPhone was sort of an early indicator of the trouble to come.
So when you look at other areas of technology, there's social media, there's advertising, there's streaming, where do you see other potential problem areas?
Everywhere. I think that it's just going to be a tough quarter. I think that advertising, we're seeing a slump based on the waning consumer demand. So, Google, Pinterest, Snap, Meta, they're all probably going to be in for a tough holiday season. And, most of the rallies right now in tech, they're not based on fundamentals. And the reality is that the facts show a really bleak picture for all of these really high priced, often unprofitable companies that just have flown so high over the last few years. And even now, when their stock prices are coming down, you look at their PE ratios, they're still insane. These are just still really expensive companies.
So how much more tech volatility are you preparing for? Like, are you preparing for this downturn to last a good long time?
Yeah, I am a bear preparing for a long, cold winter. I think there's just not a lot to be bullish about right now in the U.S. With the Fed's very hawkish stance even today about inflation, and the rate hikes are going to continue until the morale improves, and that's probably not till mid to late 23. And then globally, things are just way worse, right? We are the bright spot right now globally. The UK is in chaos. Russia, China. All of the problems that global central banks are having because of the US dollar strength right now. There's just a lot of problems. And I think you have to batten down the hatches. I'm a fan of selling rallies right now if you can get out with a profit on something and just buying the dips really carefully. Like if you're passionate about a core business and see a reasonable PE ratio and it's a historic low for the company, maybe consider buying. But I'm not even looking at like the 52-week or year to date right now numbers. I'm looking at the 5-year charts and saying, is this company, where it was before COVID, or is it still priced way higher because of the bump it got during the pandemic?
So how is this impacting your strategy and other venture capitalists' strategy? I mean, we've been talking about all this dry powder that's probably stacking up on the sidelines with nowhere to go.
Yeah. So, I think M&A is the new IPO for companies. I think right now startups are less focused on an IPO. We saw that a lot of those tech IPOs aren't working. Poshmark's exit from the public markets was a big piece of that. The Peloton CEO flat out saying that, 6 more months and they're going to sell out and go private it's a good indicator that staying public as an unprofitable tech company right now is just tough. So I think that we're going to see a lot more late stage M&A activity and less bell ringing. And, when it comes to the dry powder, VCs have a lot of it, but they're sitting on it. What I'm hearing from my peers at top decile funds, they're spending more time in Monday meetings triaging their current portfolios than they are looking at new deals. And this is in large part because these new deals, founders are still asking for 2021 prices from VCs who are very much in a 2022 recession mindset. And I think until VCs can get into deals at prices that better reflect this moment, a lot of my peers are just sitting on the sideline and focusing on following on to companies they're already on boards of who are likely to have a tough time in the coming months.
So talking about late stage M&A, I got to ask your thoughts on the latest in the Elon Musk Twitter saga. Twitter, holding Musk to the terms of the deal, at the price, not accepting anything lower. Musk saying, okay, I'll go through with it. What's your take on what's happening here and whether or not this deal is actually going to happen?
I mean, So many embarrassing text messages, just so many. Jeff Bezos Saudi hack level embarrassing text messages, right? And I think that the whole situation is just getting to a point where, you know, Elon's displaying what seems to be a rare moment of accepting reality and saying, look, I agreed to buy it, so now I'm going to have to buy it. And, you know, I think that that's the best outcome for shareholders. Will that be the best outcome for Twitter users, for Twitter employees? I don't know, but at this point, it looks like that's what's going to happen.